Hi, friends. It's Roland Kim with Keller Williams and the KymBuna team. Today is May the 18th, and it's my weekly real estate update for the Greater Vancouver area. It is getting busy out there, folks. So as of May the 16th, there was just over 2,000 transactions in the province, rather in the Real Estate Board of Greater Vancouver. Let me correct that. In fact, it was 2,025. That's about 126 transactions a day on average over a month of 31 days. We are estimating that the May is trending currently to have about 3,923 transactions in our real estate board. Now, keep in mind, that would be a 35% increase from last year, same month of May, and the first positive month year over year that we've had. When you look at January, we were down at 55% less transactions year over year. February was 47% less year over year. March was 40. Last month, April, was 16.5% less transactions, and May is trending to be very busy. We are halfway through the month, and it is trending to be the second busiest May in the past 6 years for the Vancouver Real Estate Board. So lots of sales are happening right now. Let's talk a little bit about those sales. So provincially wide, total sales in April, so last month, were 7,427. Now, as you can see, it's still well below our 10-year average, but it is trending upwards. On that, the active listings is well below our 10-year average, and we're actually trending down. So currently there's less listings out there. It has fallen for 3 consecutive months, and now we're about 25% below pre-pandemic levels of listings. And so there is a lot of pressure that's building up. When you look around the province at the different real estate boards, you can see that the average price is still down year over year. Mind you, this is April. A lot's going to change in May and June, and these numbers will start going back into positive range. But as of the end of April, all the boards still had a negative year over year price gain and a negative year over year unit sales. But they are catching up this month. So it'll be really interesting to see where May finishes and where June will start. We have this graph showing you where we are as far as a balanced market or a seller's market or a buyer's market. And we have definitely crested out of what was a balanced market in December, January, February, March, and now we are moving more and more back into a seller's market. And so that is a lot more pressure on listings and a lot more competition on buyers. The average provincial real estate price is $995,000. So it still is 5.8% less year over year, less from the height of the market, which was April of last year. However, the market is getting tighter. And once again, that's putting a lot of pressure on home prices. And to that point, home prices in the province of BC are up 9.6% since the start of 2023. In fact, they've gone up for the past 3 months, and they don't continue, or they don't show any reason that we don't expect that to continue. So we'll probably get back to previous highs this year, which is incredible. Housing starts, finally, we're starting to get more housing starts, especially in Vancouver. You can see that year over year, there's a lot more starts in the city of Vancouver, about 80% more than we had last year. So a lot more building is happening. That's a great trend that we need to see continue in order to take more pressure off the real estate market. Unemployment is low, continues to be low. There was a little bit of a tick up in unemployment, but we're near all-time lows for the past 15 years. And so a lot of people are employed, and that continues to put buyers into the marketplace. So interesting, inflation went up last month, or rather this month. It went up from 4.3 to 4.4, so not a huge increase, but not great that we see the price index moving up, and that's going to have some impact on the Canadian government's outlook on interest rates. Slight increase, but we were hoping for, again, a further reduction. And what caused that increase? Well, shelter costs have gone up. Rent has gone up year over year, and groceries are more expensive year over year. Gasoline continues to be more expensive, And now all eyes are turned to the Bank of Canada for the June 7th meeting, where they have their next decision regarding interest rate hikes, and whether we'll get another maybe quarter-point interest rate hike as they try to further put pressure on the demand and get that inflation index moving again in the right direction, or maybe they'll wait for another month of inflation news before they make a decision. So in summary, the market is really, really tight. We're seeing a ton of activity out there with sales. I'm finding, a lack of inventory, but what I'm really noticing as a difference in the past few weeks is that a lot of the a lot of the properties that have been on the market for a few weeks, maybe even a few months, previously haven't been sold, are now getting sold. So that's showing me there's constant pressure. I've been involved in many multiple offers in the past week. And, I'd say the same type of property, for example, a 2-bedroom in Brentwood area, 3 weeks ago were multiple offers with 3 people. Now we're in multiple offers with 7 people. Townhouse, same thing. A couple weeks ago, we were competing against one other person, and just recently, same type of property. There were 6 other buyers at the table. So definitely more buyers are joining the marketplace, and that is causing more sales, but a lot of pressure. As I mentioned, inflation slightly up, bond rates are up, and so that's going to put pressure on Bank of Canada when they meet on June the 7th, and we'll see if they hold for one more month of inflation results or if they do create another interest rate increase. On a macro level, very interesting. I just recently read that Britain brings back 100% mortgages where there's no deposit required. That's the first time they've done that since 2008. So, I mean, I can make a positive argument to that, and I can make a negative argument to that as well. It's just something to keep in mind. Down south in the U.S., there's certainly a lot of more negative news, it appears, than what we're experiencing in Canada. They have to deal with the U.S. debt ceiling that's coming due. There's going to be, from what I'm reading, probably a lot more bank and business bankruptcies, and their unemployment is increasing, and they're really probably heading more into a recession. And where I'm seeing that, actually, ironically, is I grew up in Pemberton Whistler, and so I know that market is a lot softer right now than any other market in the Lower Mainland or BC, and that's because so much of their buyers and their clients are American-based now, and with the Americans being a lot more cautious with them heading into a recession, likely, it's impacting. It's directly showing as a softness in the Whistler real estate market. Anyway, going back to Vancouver, our real estate market's really strong. It is very expensive, but strong. I kind of compare it to kind of like steady blue chip inventory. And I'm here to answer any other questions you have. Thank you.